Hey guys, RC here. So, I'd like to talk to you in this video about some of the few problems that Tesla's going to be facing. And some of those problems here probably sooner rather than later. I've got some theories that I'd like to cover and how I feel that some of the recent interest has been somewhat misled. And not by the fault of Tesla. I want to be clear about that. But let's go ahead and get into it. One of the first problems with Tesla right now is that they have seen a bunch of interest really without any justification. Most recently, they have talked about receiving a profit, okay, and generating that profit, whereas people really didn't look much below the surface of that claim. And while it was true, on paper, they produced some dollars that they didn't have before. What they didn't do is they didn't, from terms almost taken directly from the S&P 500 committee that decides who gets added to that index, something along the lines of quality revenue. So they're already questioning how Tesla generated this revenue. And most people haven't looked past the fact of, yes, they produced a profit. They did. But again, they did so not by selling their vehicles, not by doing anything that the company is designed to do, but simply by selling some sort of vehicle-related credit to other vehicle manufacturers. Now, I'm not entirely sure exactly what the credit is used for, but let's just assume that it's to be given to some kind of regulatory body or governmental authority type figure that gives the other manufacturers the ability to sell products at more of a return on their investment, right? There's less of a tax they have to pay. There's less of a fee they have to pay somewhere. Essentially, they purchase coupons to do their own business from Tesla. Tesla, again, this is a way that they profited. And in the name of business, you do what you have to make money. So good for them. But in terms of the value that people have taken from that and applied to where they're at right now is not justifiable. That was the first real catalyst that I noticed that caused Tesla to run up in price. I'm sure there's a number of other things people could point out for me in the comments, and I would appreciate if you do that. But that's what I would call catalyst number one. So a profit. The next catalyst would be that the profit had generated such a price increase, some price action on their shares, the company's market cap became so large that they were now valuable enough to be considered for inclusion to the S&P 500. So that's where the committee got involved that I kind of just foreshadowed a second ago. And most recently, some of the things that have come out of their conversations are, again, that Tesla doesn't have enough quality income or revenue to really be considered sustainable. And they see that steam running out, as do I. And it's not to say that Tesla won't do something else, or maybe they'll actually start to profit enough off of their vehicles. Who knows? They've definitely done a bunch of good things and come a very long way from where they were just a short time ago. But again, I feel that the market has really kind of overbought those positions. And I feel, again, like I said before, that people have been kind of misled, not by Tesla, unfortunately by themselves. But we'll get into that later. So again, Tesla has been propelled through the markets to a market cap or a total valuation that means they're now technically eligible to be added to the S&P 500. The articles that I saw, the headlines, of course, painted the picture that it was almost a guaranteed thing. Since then, the committees got together, and again, one of the concerns that they expressed was that this information about the profit didn't really tell the full tale, and that the actual quality of the revenue and money that they are earning and creating isn't really up to par with where it should be in terms of it's not coming from the products that they're actually designing and selling. The profit, again, came from selling a coupon to other vehicle manufacturers. So while their numbers are growing in terms of total number of vehicles being produced, well over $200,000 or $300,000 in some period of time. I know that previously it was questioning how many thousand they could make, and now they're into the 100,000. So that's all really kind of irrelevant for this conversation. But again, the second catalyst would be the thought and the headlines that were produced off the thought that now they're eligible to be added to the S&P 500 index. Again, the problem with that is that the S&P 500 committee, just like everyone else by now, is seeing that their profit and their revenue is not of quality material objects being sold. Again, it is of coupons. So the third problem is that recently, real recently, and most recently, after the previous two catalysts, is that they announced a stock split. Where people have misled themselves into this position is the majority of current retail investors really truly have gained their current experience from the run-up in 2017 of cryptocurrencies. Maybe not all of them, a really good portion of them. And a really good portion of the people who are successful with their trading events in the cryptocurrency bull market of 2017, those people successfully pulled money. And I believe that those people would have only done what they considered to be the smart thing and tossed it into new and emerging technologies and companies like Tesla. And I believe that maybe, not to say that Bitcoin gains have propelled Tesla in the stock market, but some of those same mentalities of buying stuff before they have actual value, which is all cryptocurrency gain ever was a hope for future value. And in the stock market, that's not how things have worked, and there's been a recent disconnect. And I think that that disconnect is due to new money being brought in from new mindsets, and those mindsets could have been influenced by events in cryptocurrencies, specifically hard forks. I remember the first time I heard about a hard fork, the first explanation that I was given that I could actually find was comparing a hard fork to a stock split. So I think that as more and more hard forks came about and more people actually generated money in those events, all while no real experience in the stock market, and the only frame of reference or any kind of reference that they have is that a hard fork is similar to a stock split. Now they're playing in the big boys games. Now they're in the stock markets. And something that is already proven real recently, but in the span of their experience is really everything they've ever known. Tesla has made them lots of money. They were right. So what do? They go ahead and put more money into it. They start selling real valuable things and making sacrifices in their lives over the last few months to buy more shares in Tesla because of this, all of these things, because of the profit, then because of being out of the S&P 500. Now, because of the stock split, has really caused a panic buying scenario. FOMO has set in, people. And when FOMO sets in, the real players are selling. So what I see happening is that tomorrow people are going to wake up and they're going to see in their portfolios where they're expecting to see zeros added to their balance of value, they're not going to see that. They're going to see the same value, because a split is actually not anything like a hard fork. And there is no value typically created from the actual mechanical adjustment of one share turning into 5. The price is adjusted accordingly mechanically. And while there may be buying or selling pressure creating price action around those relative price points, when the mechanical adjustment takes place, in a hard fork scenario, you have extra value. In a stock split scenario, you have extra shares in the same value. And after a crazy meteoric rise of over 60% in Tesla over recent events, you can bet that when the value stays the same on Monday, people are actually going to realize they need to pay rent. They need to go back and relieve themselves of some of their sacrifices, because they actually haven't been worth it, because what they thought was going to come to fruition didn't. They're going to sell some of those positions. We're going to see Tesla drop. There's been other, while you can probably take them with a grain of salt, there's been other opinions from real professional analysts, not just someone with an opinion on YouTube like myself, but there's been real professional opinions from analysts pointing to the fact that Tesla has a price target in the next year or so to be around $80 to $90 per share. And given the gravity of all the recent events and how they could easily come crashing down all at the same time, I don't I don't think it's really out of the realm of possibility. Again, it is very likely that Tesla could just do what they've done every other hurdle they've come up to and cross it. They could easily come up with a solution to this problem. And there's a long way to go between $2,200, $2,300 and $90. A lot of things can happen in that time. And to be honest with you, investors in Tesla have been some of the strongest in terms of their beliefs. And while it may not necessarily be justified, again, because the company isn't really profiting yet, the reality is if enough people repeat the same information, it becomes reality. And again, markets decide the price based on how much people want to pay for something. No matter how fundamentally promising a business can be and how great their profit can be, what their dividend is, what their EPS is, anything, the PDE ratio, it doesn't matter. Any technical aspects and true fundamentals from behind the scenes of how the company does business and what their customers think about the company, all of those factors still don't mean that people are going to appreciate an increased price on a share. Again, it's all in what people are willing to pay for it. So while analysts can throw out $80 to $90 price targets in the long term, and people can point out flaws in certain narratives supporting Tesla right now, it's really all to be seen. And if I have anything to recommend, it's caution. I wouldn't necessarily say buy or sell. If you hold the position, hold it, because you probably hold it because you believe in something more than what the price will be tomorrow. So if you're thinking about getting into a position, I would, however, recommend waiting, just because, again, when things have come up so far, over 60% recently, they're bound to correct. And when they've come up on 3 different catalysts that I've just identified that all really aren't justifiable and probably won't pan out in reality, I feel it's only a matter of time before this recent climb that has not established a level of support anywhere along the way up is going to come crashing back down to the most recently established level of support. I don't know exactly what that is right now, but again, I was just sharing the options of what people have been saying and hearing and what people have not been considering. So this is RC. We'll see you in the next video.